Hello there, everyone. Thanks for watching. I'm going to go over some quick trade setups for this week so far, and it has been one hell of a week on the euro dollar. I tell you what, if there's ever been a time to focus on not only technicals but fundamental analysis, this week was a biggie. I won't go into all the details and bore you about it. Let's just go into what our indicators were telling us this week. I began the week, you can see here, the euro dollar had actually made the lowest low of the year. Down here at 22.67, so I had my support line drawn in there, and so price action started off consolidating, basically moving sideways but making higher lows and higher highs and looking like it had found a bottom and was starting to consolidate. And what I was doing in that case was basically trading the envelopes. I was using the 15 and the hourly to look for areas in price action where I could get involved in sells, because I still thought the euro was weak. So I wasn't both buying and selling. I was just, whenever price action had gotten overextended on the envelope, got involved in a sell here, waited for it to finally pay out. And then once we had this one up here, this became a kind of classic sell, because if you look here, you have the daily R1 and price action overextended according to the envelope. That's a good area of resistance. You got two forms of resistance there. Anytime there's more than one form of support or resistance, that's great. Get involved in that trade. And as you can see, this thing fell really sharply. This was because Germany just popped a surprise on the market and banned naked short selling. And if you don't know what that is, Google it or go to my website and look into it. I explained it there. But that was where fundamentals came into play and started driving price action pretty hardcore. I mean, the news came out right here, and you can see there was no doubt about it. This was a negative. This was bad timing on Germany's part. And the way I traded that news event was, I'd already been in a sell from up here, and once it got to this level here, I was thinking there would probably be another bounce. Remember, we had been making higher lows each time. But when it went on down to this level, I took all those pips with me. That was about 70 of them, and I got out here because this was, in my opinion, at the time, and that's again I should have not been so biased, but I thought this was a level of support and we'd see a bounce. Instead, it continued to go down. I waited until it actually broke below the tail on this candlestick. That was just my judgment call. Once we got below that level, that would have been the lowest level the price action ever got this year. Once that had happened, I got back in for another sell on down, even though we were grossly overextended, and got more pips out of this move. And then going into the Asian and the European session, price action consolidated. This was on Tuesday. Going into Wednesday, we had some central bank buying and sovereign bank buying that affected the market to shoot price action back up. So whenever I see something like that happen, I want to use my fib lines in order to understand where to re-enter, because I certainly want to go with the momentum, especially if the banks are creating it. Let's just ride on their coattails. That's what it's all about. And this tail right here I used as my most recent low, obviously. And then, this was a tail that had formed, and then price action began to retrace. So this was my first use of fib, and you can see price action found support at the 38.2 here. It also found, if I go ahead and include the next swing high, it found support right here again, 38.2, and then if I go up here to the next swing high, it found support on this retracement down here about to the 38.2. So each time the 38.2 provided support to lift the currency higher and let it rally further. Going into the week that we're in now, and this was today, using that same low I've been using, and then the most recent high as of earlier today, price action, as you can see, continued to find support at the 38.2 right here, and there's a good buy up to there, and again it came right back down to the same fib level, 38.2, and then rushed on back up. Again, you had central bank buying going on here. This currency pair, in my opinion, is going up to the 2700s, and then it's going to stop. It's going to fall back down again, and that might be our range here from the 2100s up to the 2700s. And that also, the 2700s level also correlates nicely with the weekly R1. As you can see, it's kind of midway in between the 2705 and the 2745. So I would definitely look for this level to be the next level that price action tries to jump on up to, and at that point I think the banks will back off and we'll see some profit taking and some selling. It might not actually happen this week, But maybe going into next week, the 2700s is definitely an opportunity to re-enter for maybe a long-term sell, because I don't think price action has got the power to go much higher. But that's my 2 cents worth. So yeah, and another thing I want to throw at you, so I don't forget, and this goes back to the fib lines as well. You know, God knows I love Fibonacci, but predicting this low right here is, or excuse me, confirming that this might be the lowest low euro dollar makes for just a little while, is the fact that if we zoom on out to the monthly chart here, this was the lowest low the euro dollar ever got to back in October of 2000, and if we use the Fibonacci line, we'll find that we actually achieved 50%, the 50 fib level right here, and that is where we found the bottom, you know, just a couple of days ago, and now you can see it's come back up. So it does appear like the 50 is probably a good point. We actually reached it this time as opposed to last time. Last week we actually reached the 50 right here. You know, I hope you can see that, right to the pip of the monthly Fibonacci high-low ever for the euro dollar. So, and this is the time frame that the big traders use. They use the monthly and the weekly. They don't screw around with this intraday crap that we us retail forex traders do. You know, they're just looking for long-term trends, and they leave positions open for long times. And so obviously once it got to the 50 fib line, what do you know, you see it end. You see that massive sell-off that was driven by the news come to a screeching halt. So yeah, I hope that gave you some insight. I hope I answered a little bit of questions about using fibs, using the bands, using moving averages. Feel free to leave questions, comments, whatever. I love them. That's why I've got the website, forex-nation.com. If you made it to the end of the video, good for you. Thanks for watching.